So today I was talking to a friend of mine. She works with billing, medical billing, and it's so sad that she would have to actually reach out to all these clients that are behind on their bills. And I asked her what was the worst case scenario that she ran into, and she said some people would owe over $100,000. So I'll put these bullet points over here to show you guys how to combat something like that. Okay, say you have a policy, a life insurance policy without living benefits. Okay, what most people would experience: you have a heart attack, you survive, but now you're buried with hospital bills and can't work for months. You're diagnosed with cancer. Treatments are long, expensive, and your regular insurance won't cover everything. You got Alzheimer's or another chronic illness, and now you need long-term care or LTC, not covered by your insurance. You suffer stroke, need physical therapy, a caregiver, a home modification, all out of pocket. You have to pay that yourself. You're stuck fighting with health insurance while still responsible for copays, deductibles, and loss of income. You're forced to empty your savings, take out loans, or rely on family just to stay afloat. You go from surviving the illness to drowning in debt and stress. On the same token, if you have a life insurance policy with living benefits, which I offer, all the policies that I offer come with living benefits. With life insurance with living benefits, what you could have: you're diagnosed with cancer, your policy pays out $100,000. That's just an example. It could be a lot more depending on what you choose. You could have a $10 million policy. You're diagnosed with cancer, your policy pays $100,000 in cash to use however you need. After a heart attack, you'll receive a living benefit check that lets you pay bills while you heal stress-free. You're told you have early stage Alzheimer's. Your policy kicks in to cover home care before even need a nursing home. A stroke leaves you unable to work. Your policy sends you a tax-free money. It's very important, guys. I want you to understand this money that you receive, it's tax-free, is not reported to the IRS. A stroke leaves you unable to work. Your policy sends you a tax-free money so you don't fall behind on mortgage. You're diagnosed with multiple sclerosis, kidney failure, or severe diabetes. You access your policy while you're still alive. The money isn't restricted. Use it to pay off debt, to cover lost income, get private treatment. You can actually use that money to go see specialists, the best doctors in the world. So it actually helps you recover quickly. Pay a caregiver, somebody that comes to your house and attend to you personally. Maintain your lifestyle. And the final takeaway from this, instead of saying, how am I going to pay for this? You're asking yourself, what is the best way to use this money to recover and live better? I hope this makes sense, guys. So instead of drowning in debt by having the right insurance, you can actually continue your lifestyle instead of having to drown in debt and get phone calls from these debt collectors saying, where's the 100,000, where's the 10,000, where's the 1,000? You still owe that much. Your health insurance company only paid X amount of dollars, and you're still responsible for the remaining balance. Living benefits turn your policy into real financial protection, not just after death, but while you're still alive and need it most. I hope you guys understand what I'm trying to convey with this message. By having, just think of it this way: if you get car insurance, for example, and somebody does ram into you and you get into an accident at no fault of your own, next thing you're at the hospital and your vehicle is damaged and so on and so forth. So the reason you got that insurance is to make sure you're protected in the event an accident or something happens, to your vehicle. This is the same concept, guys. You pay X amount of dollars. Of course, the healthier you are and the younger you are, the more coverage you could have. I gave an example a couple days ago that a young lady in her 40s was able to get $1 million policy for $50. $50, guys. This is like what you're doing. You're transferring the risk from you to the insurance company, and the insurance company is saying if any major illness or major accident, we will give you $1 million. No one has to die in this situation. It's just any illness or accident, you will collect that money. So you can take that money and use it tax-free to pay off mortgage, to do whatever it is that you want to do with it. It's your money and you can do whatever you want to do with it. And instead of falling in debt, medical bills are the number one cause of bankruptcies and also divorce. When you have financial stress in the household, the couple tend to drift away, and eventually that leads to divorce. I don't know what the stats is, the statistics on this, but I do know it's very, very high. Imagine having a house, a spouse, and 3, 4, 5 children, however, even 1 or 2 child, and having to deal with all this, and one day you're unable to bring that paycheck because of sickness or accident. What do you think is going to happen to everything that you built over here, all your assets? It's just going to slowly, even if you have savings account, even if you have money in your savings account, your money's going to liquidate. Your account's going to, all your savings going to disappear quickly. The mortgage company is going to take the home. Even if you have assets in it, you're not going to only lose the home, you're going to lose the asset in the home. I mean, your what's it called? Why can't I think of the right word? When you buy a house and you build, I don't know why I can't think of the word. Equity. When you build equity into the house. So if you buy a $500,000 home, for example, and few years go by, and your house has gone up in value. So now the $500,000 house is worth $700,000. So you have $200,000 in equity. So when you're not able to make payments onto that house, the bank's gonna take the house. So you're gonna lose the house and the equity in the house. So and your car is going to get repoed because you're not able to make payments on it, and the spouse and the children would have to downsize their lifestyle and live into a smaller apartment and completely change their lifestyle. But all I'm trying to say is by having the proper insurance, the insurance company promising in the event something does happen to you, we'll give you that money. It's just like a regular insurance, like having a car insurance. I try to simplify it, or having a home insurance. Best thing to do in a situation like this is to prepare yourself. Do it while you're young and healthy. And I gave also the example just recently where some people aren't able to get a large face value or death benefit because of they have health issues, and their monthly payment is a little higher than it would be for a healthy person. So if you have a existing heart attack, diabetes, stroke, cancer, if you have all that, if you have any of these pre-existing condition or these health issues, and you try to get a life insurance policy, it would be extremely expensive, and your face value would be very small. But when you get it when you're young and healthy, you can pay very little, but you get so much. But my recommendation to you guys, or I shouldn't say the word guys, my recommendation to you, the person that's listening right now, I want you to understand the concept that I'm saying over here, that comprehend what I'm saying. So you get policies on your children, which, they're still young and healthy, and these policies will be basically pennies a month, like maybe $50 for $1 million, $2 million, $10 million. Get a large insurance policy on your children, and in the event something does happen to them, God forbid, I hope nothing ever happens, but in the event of an accident or illness, you'll be the beneficiary, you and your spouse, and you can take that $10 million or however the face value is, and you can use it to take care of the children and take care of yourselves. This way you're not taking time off work and you're losing your job, try to attend to your children and so on and so forth. So if you call me, for example, and I ask you the health questions, we're called field underwriters. So the policy is based on gender, age, and tobacco usage. So these three things determine what your monthly payment is and what your coverage is going to be. So if you find it to be too expensive, get these policies on your children, and in the event something does happen to them, you're paying so little, but you're getting so much, and you can take that money, pay off mortgage, hire the best doctors for your children, basically find the best specialist in the country and fly over there. You can pay for all of that. So basically, instead of how did the note say over here? It says instead of saying how am I going to pay for this, now you're saying what is the best way to use this money to recover and live better. I hope it makes sense, guys. Just all I'm saying is this is very simple concept. I'm not saying let's go build a shuttle with Elon Musk and go to the moon. And this is very simple. You buy insurance, they cover you. It's very simple, guys. Very, very basic concept. Very basic mathematics. You just spend a little bit of money here and you got high coverage. And this money comes to you tax-free to use however you wish. You can do whatever you want to do with that money. It's your money and it's tax-free. So instead of being a miserable person, having to deal with all these unexpected bills and also fall in debt. Like I was talking to this lady a few days ago, and that's what she does. She does medical billing, and I had a in-depth conversation with her, and she was telling me how all day long she would have to dial out and call the clients and say, oh, you owe 1,000, you owe 10,000, you owe 20,000, you owe, and the clients would say, oh, I didn't do this, I'll give you an example. This one client called her and they're like, oh, I didn't have a throat checkup or something. And they're like, according to what I see on my chart over here, you had your tonsils checked or some kind of work done on your tonsils, and your tonsils are located. It's very comical. It's funny, but it's not funny. You know what I mean? It's just, it's horrible when people are put in a situation where they're like, what am I going to do? What am I going to do? I owe thousands of dollars and I am sick. That paycheck's not coming. And then you got the bill collector saying, oh, you owe us money, you owe us money, you owe us money. The mortgage is going to come, the car payment's going to come, your medical bill, your medical bill is going to continue on, the phone call is going to keep on coming. And you can offset all of that with just simple decision by getting a life insurance policy with living benefits, which mean the money will be available for you while you're alive in the event of sickness or accident. It's a very simple concept. I'm just trying to simplify this as much as I can, yeah? The concept is very simple and it's very easy to understand. You just put a little bit of money into this imagine it's a saving account. And in that saving account, say if you have $50 you put every month, and then one day the bank's going to call you up and they say, Mr. Jones, with the $50 that you're putting in into our bank, we're offering you, or we're not offering you, we're giving you for free and no additional cost, we're giving you $1 million coverage. You're going to say, oh my God, this is the best bank ever. I'm going to tell everybody about it. And that's all it is. You're just putting money into the bank, and that money will pay at one time. You are going to get sick, and you are going to get tired. I always say that. You're going to die and you're going to get sick. Everything's polluted. Everything's modified. GMO this and GMO that, and the milk is altered, the bread is altered, the Coca-Cola's got something, the Pepsi's got something, the next thing's, even when you come out and breathe the air, there's something just in the air. So the chance of you getting sick or dying, it's 100%. So that lottery ticket's going to get cashed for sure. So even if you look, I'm gonna do this right here, okay? So if you get, one thing I want to mention before I do this calculation here, I want to mention something. If you get this policy and a year or two later, and you've been paying to this policy, you might have like maybe $1,000 or $2,000 paid into the policy, and something does happen to you a year or two later, you have 10, 20, 30, 40, 50 million dollars, depending on how big your face value, coming to you in 2 years. Like, it's so simple. The concept's so simple. So you don't have to wait 30, 40 years before because nobody knows. If people knew when they're going to get sick or get into an accident, wouldn't you think they would make an immediate decision, say, yes, sign me up right now? But nobody knows. Anyway, so if I pull a calculator over here, let me see here. So if we go, let's just say, give a real simple example here. If we take $50 and multiply it by, say, I don't know, 30 years, okay, times $50 times 30, is that right? Let me clear that. It doesn't make sense here. Okay, how do you clear this? There you go, clear. Okay, so if we take $50, $50, okay, $50 times 12 months, that's how it should be. Okay, 50 times 12, so you're paying $600 a year, right? So every year you're only paying $600 to that policy, which is, if you really think about it, it's not that much. And now we have to multiply that by 30 years, okay? Like, say if you have your policy for 30 years, for example, or you get sick within the 30 years, times 30 years. Those are all realistic numbers here, I'm just showing you. So here you have, after 30 years, you only have $18,000. That's 30 years of coverage for $18,000. But the thing that you have to keep in mind is, what are you getting out of that money? What value? Like, if you pay the insurance company $50, what are you getting back? You're getting $1 million. So even if, just imagine within 30 years, aren't you going to get sick, or something's going to happen? Something's going to happen. So in 30 years, you're paying $18,000, which is, if you really think about it, in the span of 30 years, it's not much at all. But if something does happen to you during that time, and stroke, heart attack, diabetes, and multiple sclerosis, kidney failure, and so on and so forth, or you get into an accident, you just call the insurance company and they give you $1 million, $2 million, $3 million, and you're in it $18,000. That's like the lowest amount of money you can put in, and the return on your investment is absolutely incredible. $50 in, $1 million out. How are you gonna? Where else are you gonna do that? And it's tax-free, given straight to you to do whatever you want to do with it. And you don't have to wait 30 years. It could happen in 4, 5, 6, 7, 8, 9 years. It could happen anytime. So instead of your illness or your accident turns into something ugly, it could turn into something good. Give me a call, guys. 910-447-6508. Don't delay. Do it while you're young and healthy. And your face value or your coverage is going to be a lot more for a very tiny monthly premium. And if you can't do it for your children also. Believe me, it'll be the
Did you know that medical bills are the number one cause of bankruptcy and even divorce? One unexpected illness can wipe out your savings, put your family in debt, and create stress that damages relationships. But it doesn't have to be that way. With life insurance that includes living benefits, you can access tax-free money while you're still alive to help with medical bills, lost income, or other urgent needs. Start young, lock in a low rate, and protect your future while you're still healthy. Call or text me at 910-447-6508 to get started today.